All right, what's going on, everyone? All right, so we're back with the weekly recap and outlook video. We had a lot going on this past week, and we've been getting a lot of questions. Is the bear market over? Have we finally hit the bottom? And we're starting to try to see some of that kind of relief that we're kind of going through, especially with the inflation data coming out. So we're going to kind of cover some of those bases this week, and then we're going to talk about some technical analysis and what we expect going forward. All right, so we had midterms last week. Again, we don't like to talk much politics when we're talking about the stock market, but it does affect it. We kind of had like a little bit of a slow kind of build up till the at the beginning of the week, just mainly because we didn't have a lot of data coming out until we had finally the CPI data come out. So we had CPI month over month was down 0.2%. We had core CPI down 0.2%. It almost seems like inflation is finally kind of given a little bit, but I'll get to that in a little bit. What we've been seeing this initial jobless claims numbers the past couple of weeks really starting to trend down again, which kind of worrisome because you see the labor market starting to show a little bit of strength and resilience again. But this week we've seen more jobless claims, which is what you want. You want the labor market to kind of ease a little bit, but you want the economy to ease in general. That way, it kind of puts less pressure on the Federal Reserve and brings inflation down. We also had University of Michigan sentiment. Bad news is good news. Will continue to be going forward. We were down lower than expected, which helped spark a little bit of a rally on Friday. But we'll get a little bit more into this whole inflation data in just a second. So here's the economic data outlook this week. Then we have the New York Fed 1 year and 5 year inflation expectations. This won't really move the market that much, just mainly because it doesn't have that high bearing on the market in general. But I'm actually very eager to see what their 1 year and 5 year expectations now are, just mainly based on the lower than expected inflation numbers that we got on Thursday. Um, PPI final numbers are going to be very heavy for the market, along with retail sales and housing starts. So we have some big economic data coming out this week, so we shouldn't be short of volume and volatility. Now we could see a little bit more of a trending going up, but as you can see right here on the market, we've been trying to trend on this main line. We bounced up once right here, and then we kind of came down, kind of found this bottom right here with their support, and then we kind of slowly melted up until we hit this resistance again, came back down, melt up yet again, and then we had the CPI data, and we're just trending around that top line. So we very well could see a little bit of a cool off this week, just kind of retest some of those support levels that we kind of just absolutely blew through. Um, but remember, it's very, very data driven. This does not mean that we've completely cured inflation or beat inflation. I want to see multiple months of inflation going down before I kind of get on the bandwagon again of saying, yeah, inflation's going down and everything. But housing numbers are mainly what I'm going to be watching this week, just mainly because 42% of CPI is housing. So we very well could see a little bit of the easing. We've been seeing some of the housing market kind of ease a little bit with the prices and stuff. So I just want to see where that's kind of going as well. So let's get a little bit into. All right, so looking at SPY here, you can see where we were in this rising wedge right here, right before the FOMC statement, where we had a hawkish J Powell that came out and pretty much didn't count out the future of rate hikes. So of course we were going to continue going data driven. We got down here, we bounced off this major support that used to be resistance on this line, and we caught a bid and we kind of melted up and kind of just hung out right here in this area right before the CPI data came out. And now multiple Fed officials this week have also said that they believe that this lower inflation data is mostly an overreaction. So that's mainly why I see we could get a little bit of a pullback going into this week. But if you look at this daily MACD, it's starting to kind of rise it up again along with the stock RSI. So we could see a little bit more of a pull upwards if we can continue this bullishness before we pull back. And if we do, I'm watching this 408 gap fill. When we get to, I have bought a December 17th put, and if we get up here to this 408 and we continue trending, this will be the second one where I average down for this long term. So I, I do think this is a, a good thing for, especially for inflation reading, but we also, remember, we have core PCE data coming out this month that the Federal Reserve watches way more than CPI data. Now, looking at Apple here, you can see we broke down right there on the FOMC statement. We were just kind of bouncing right here on the support, and then CPI data came out. So Apple is looking very strong, but remember, this line is going to be acting as major resistance. So looking around 154, 153, 154 ish could be kind of the top right here for for Apple. SPX, you can see we gapped up on that CPI data information, and we've been kind of bouncing around this top line. We see this MACD on the 1 hour starting to kind of come down. So we had a lot of selling going on right here at this 4,000 level right before the market closed on Friday. So I really want to see how 4,000 reacts in general, to see if we do come back and kind of test some of these main levels that we busted through, and if it was possibly an overreaction. But we see the US dollar completely plummeted on a lot of this data and everything coming out this week, along with bonds getting a huge bid, hoping that inflation's going down. You see bond yields go down. Remember, bond yields are terrible for the tech sector. So the fact that bond yields, if they continue to go down, tech will be ripping. And I'm not sure about the short interest on all of these, but I'm sure it's pretty high along with the bear market. Now, I'm not saying the bear market is over at all, but also at the same time, you don't want to be too risky. So remember, always play with money that you're okay with losing, and just mainly because this could go either way at this point, and we don't really have a lot of this information. So if you like this video, don't forget to like and subscribe. I will continue to my daily updates going out throughout this week, so just keep up with those. I'll let you know on the put and call walls if they update. Everybody just continue to have a great weekend, and God bless.